All right, welcome to another episode of the Accidental Landlord. Today, it's just me solo. We're going to do a Q2 market update. So we're going to try to do this quarterly just to keep our listeners informed as to what the rental market is doing. We're not going to be super heavy on the data that's out there as far as like national trends and percentages of rent appreciation. We're going to try to keep it local to our market as to what's going on. Some of it's just going to be our personal experience renting houses every day in the market. Some of it's going to be data we do pull from some analysis of our local market. But before we do that, I want to talk about a couple bills that are out there. Some of these are a little bit older, like back in the beginning of 2023, Senate Bill 2559 passed. The governor signed it. This is basically legislation that says that a tenant or a prospective tenant can use their own credit report in a certain format, and that you can't charge them to screen their credit, which is a problem for landlords. This isn't as big of a deal as everyone thought it was going to be, mainly because it's voluntary. So the landlord is not obligated to participate. They can if they want, but they don't have to. So I'd say just keep this on your radar, know that it's there, and if you see someone present you with an application referencing this, that's what it's about. It's up to you as a landlord whether or not you want to take it. I know my personal opinion is we are not gonna take this because we don't know what the opportunity is for fraud or for people to, alter things. Like, we'd rather run our own reports and our own systems that we have full faith and confidence that we're getting accurate information. So keep that out there. Another bill was Senate Bill 466. This was a bad bill for landlords. Thankfully, it was defeated. This was potentially going to be a disaster for landlords in our state, but don't really need to spend much time on this. We did put out an article on this. If you are interested in it, go to our Learning Hub. It talks about it in detail. Is the one that is still potentially in the works is Senate Bill 567. It is basically takes Assembly Bill 1482, which was a statewide rent control, and increases the severity of it. So we already were dictated to back in 2020 that we were going to have statewide rent control. A lot of single family houses are exempt. There are some parameters around that we don't need to get into necessarily in this update, but essentially this new law is going to take the work they did with that first rent control bill and make it stricter. So making it harder on, if you're going to do just cause eviction, they're making that harder on the landlord. So if you haven't talked to I believe it's scheduled to go to the assembly and it's not voted on yet. The Senate passed it, but reach out to your assembly members and express your opposition to this, because this would be bad for landlords and ultimately bad for tenants, because the more we regulate pricing when it comes to housing, the worse it is. And this has been proven over and over and over again by economists, by cities that have done it in the past, but for some reason politicians continue to want to try to present this. So that's something that's in flux right now that maybe you can make a difference in. Now let's get to the local rental market. So if you recall in our last update that we did, we were seeing price decreases. So we saw a glut of inventory coming on the market. This is rental inventory. I just want to be very clear, this is not sales inventory. We're only talking about rental issues, not anything to do with the sales market. So we saw, for a number of reasons, an increase in available homes on the rental market, which led to oversupply in our local area. And we saw a lot of landlords that were lowering expectations on rent. We were lowering prices in some case, and some cases we were just not pricing them as high as we would have prior to that. A lot of that has calmed down. We aren't seeing the oversupply of rental houses that we were the previous quarter, which is good. We're not seeing 15 applications on every property like we did back in 2021, but we are seeing what I would consider a healthier amount of people that are interested in our properties. I wouldn't say it's a feeding frenzy like it was back in 2020, 2021, but it's adequate. So if we have a 3-bedroom, 2-bath house in Ventura, it's not uncommon to get 2 to 5 applications for it, and having one of those be qualified and getting the property. We're not really lowering prices on your average everyday run-of-the-mill rental properties. So there is enough demand that we're not seeing price decreases, but again, we're not also seeing crazy, interest that also was probably unhealthy for the market. So there is a local research firm here in Ventura that did put out some data. They are saying that year over year, rents in Ventura County are up about 7.4% in this past year. And obviously that doesn't factor in that quarter that we had some struggles getting our properties rented because of the oversupply. They're looking at the whole entire year. And I'm in agreement with this, that they're seeing about a 7% increase. And I think it was somewhere in the 10% the year before that. So rents are definitely going up. It's putting a strain on some people who are trying to find properties to rent, but it's not as bad as it was. And we're still renting our properties. We're still finding really good tenants that meet our strict qualifications, and properties are getting rented. So that is definitely good news. And honestly, we want it to normalize. We want there to be a healthy supply and a healthy demand. When it gets off one way or the other, I don't think it's good for the market at large. Even though landlords might benefit because prices went up really fast, or tenants might benefit because prices went down really fast, it's better on everybody if things just kind of work the way they're designed to work. So you can expect it to be competitive for your rental properties going into the next quarter. Obviously, this is June. We're going into the really busy season when it comes to leasing. So we still expect there to be a healthy amount of competition for the properties. This just goes back to, property management 101. Make sure you're presenting your property in the best possible fashion, whether you're taking nice photos, make sure the property's clean, there's not junk, there's not, stuff stacked in the corners. People want to be able to visualize themselves in the property when they go see it. And then the other thing that I think helps us rent properties quickly is if we meet the tenants on their schedule. What I mean by that is, if you say we only show this property from 9 o'clock to 10 o'clock on Tuesday, it's going to be really tough if you're not going to make it available after work or on the weekends. So in order to get your properties rented to the most amount of people and quickest, make the property available when your tenants are looking to, or when they have time to go and take a look at the properties. We're seeing strong demand pretty much in all of our markets. People want to live by the beach. People want to live in the cities where all the services are. It takes a little bit longer to rent properties, maybe in Santa Paula or Fillmore, certain parts of Moore Park. But the big cities where everybody wants to be, we're seeing really good demand for rentals in those areas. I also wanted to just give a quick update on the status of evictions. So obviously during COVID, it was nearly impossible to evict somebody from a property because the courts were shut down and all the laws and the CARES Act and all the things that were in place. For the most part, a lot of that is gone, and we are seeing evictions go through. They're not taking 6-8 months just to get a court date. They're pretty much back to a more normal schedule with the county courthouse, which is good. So if you are facing a potential eviction, or you've been putting it off because you didn't want to deal with the hassle related to the courthouse and shutdowns and all that, don't be shy about doing that. If you need a good eviction attorney, reach out to us, because we work with some really good eviction attorneys in our area that know the market. Just understand, if you're going with an attorney that's not from our market, which is possible because there are attorneys who do evictions from afar, you're kind of doing yourself a disadvantage, because you have to understand the players, the judges, the people who are making the decisions in the courthouse. And if you have a reputation there and you understand how the game works in our particular courthouse, your success rate is going to be much higher. So make sure you're using somebody local when it comes time for evictions. I want to also take the opportunity to talk about an opportunity that we are exploring with our clients and potential clients, and that is something called house hacking. So this is something we're going to be rolling out in the very near future. And essentially what house hacking is you can take a house that, let's say we have a 4-bedroom, 2-bath house that in East Ventura that would rent for $3,500 a month to, one party, a family or a person who they rent the house and they get the use of the entire house. Or we use this house hacking strategy where we rent it out by the room, the same 4-bedroom, 2-bath house. Instead of getting $3,500, we can rent out the rooms for roughly $1,200 times 4, and we're in the $4,800 range. That's a program that our Rincon Property Management offers. It allows our clients to get superior returns versus renting out their house the traditional way, just to one party. There's some operational complexity that goes along with this, and there's more work to it because we're renting out rooms individually. But if you're looking at this from an investor's viewpoint and you care about the return that you're getting on your investment, it is a viable strategy that you should be considering. If you have any interest in that, please reach out to us. We're happy to have that conversation. Be on the lookout for us rolling this out, like I said, in the very near future, probably within 2 to 4 weeks. We're putting our finishing touches on it. But that is one way that you can cash flow higher amount in our area, because obviously our area is not prone to cash flow because the prices are so high. But with the strategy of house hacking, you can get a much better return. Not quite as good as if you do a short-term rental like an Airbnb, but still passive. So the management company would be the one, renting and trading out roommates and dealing with all the roommate issues. Whereas on the short-term side, it requires some active participation. So that's it. I just wanted this one to be short and sweet. The good news is the market's kind of returning to normal from the rental perspective. Rents are going up. We're still renting properties. We don't anticipate any major changes. Obviously, interest rates affect people selling houses, and interest rates have kind of been high, which has kind of slowed down the sales market, which sometimes improves the rental market as well. There's definitely a correlation. Not all the experts agree exactly what the correlation is, but we definitely see it in our business. Thank you for listening. If you have any interest in these bills we're talking about or more of the data, go to our learning center on our website, rinconmanagement.com/learning center. We have a lot of articles and videos and content on all the stuff we've kind of talked about. Thanks for your time, and we appreciate you guys listening to the show. And one favor to ask, if you could leave the show a review, it would really help us out. Thanks, guys.